Good morning and welcome to the Opportunistic Trader for Tuesday, August 14th. It was a very exciting day yesterday. A lot of trading for us here at the Opportunistic Trader, as well as in the market in general. A lot of good news flow came across our experts, going from Greg in currencies starting off Sunday night. Giving us all that information into the trading day on Monday. He was very, very on top of the Turkish situation, which is going to help all our members and people in the chat community. The information was very, very market moving. Yesterday was one of the better trading days in S&P that I've seen in a bit of time. We opened down 17 handles overnight, actually traded green or positive in the morning, and then traded back down and took out the lows, and then traded back a little bit higher towards the end of the day. So there was great trading action there, as well as in crude oil, which had an incredible move down and then a V bottom spike back up to basically be positive on the week. We were able to frequent in that market, and as I call it, scalp or traded multiple trades in that market to be positive on the day. Before we go over the markets from the overnight, I'd like to just recap the trades coming into the day yesterday and trades we did during the day. Our trades were 7 winners and 1 loser. Obviously, we would take that every single day, but I think it was very quantifiable yesterday, and I wouldn't say easy, but easy for our members and people looking at what we're doing to enter the markets, make these potential trades, and get in and out with stops and levels. So we started the day yesterday short S&P from Friday with a call against it, and we made 10 points on the S&P covering, and then we lost $1.50 on the calls. We also sold a call spread, which is like I explained yesterday, a good way to sort of be short the market with not having the risk of doing the actual hard futures and giving yourself some leeway to stay in position. So, if the S&P, which is at 2835 right now, if you wanted to get short but you weren't so sure this was a good level, you could look at calls above the market, or a call spread, or a call ratio spread where you buy 1 call and sell 2 and take in credit. Those are things to look at. We also bought some S&Ps near the low, took $5 out, and then we made one more trade where we sold S&Ps at 29. They ran up to like 31. We had like a 35 stop in, but the market came in and we felt like it would be a good cover, and we covered at 27.5. And in oil yesterday, the markets were really, really good and volatile, and we had 4 trades in there. There were 3 winners and 1 loser. The trades were taking in about 40 to 50 cents on all the winners, and the loser lost about 60 cents. So overall, yesterday was a really, really good trading day for us. We're not expecting the same today, but obviously, hopefully we get good trading action. And I just want to touch a little bit on the overnight. Scouring across Asia to start, the Nikkei was the outperformer. It was up about 2%. I guess it's the yen trade that everybody's looking at. China was a laggard. It was down small, as well as Hong Kong going across the pond to Europe. Europe is up slightly. Nothing to really shake anybody up, but I guess the mantra theme today is the Turkish lira has come down from above the $7 area down to the 6.5, and I guess that solve the world's problems overnight. So markets across the globe are stable. Bonds are again slightly lower. That was the interesting thing yesterday, was that the bond never participated. Gold, obviously, which Vince, who is with me, will touch on, didn't participate. It actually closed below 1200. So the trades around the risk off trade really didn't appear yesterday. And I was sitting at my desk and I was like, wow, if we have this kind of move, and volatility spiked about 20% intraday, but none of the products around it moved. So I don't know if they're crowded trades or what the story is, but that's sort of what I'm looking at. Looking at option pricing, options are still very, very high to the downside. I think people are looking to get hedges on, and that's my take of it. I'm going to throw it off to Vince to talk about what he sees and possible trades that he would be interested in doing. So good morning, Vince.
Yeah. Good morning. Thanks, Larry. To Larry's point, if you look at the drivers, there's two things that we do on this call that is tied to the chat. One is Larry is, and me to a lesser extent, we're going through the trades, and that may be fast and furious when you say why, if that. A lot of this is not based on anything except momentum and a feel for the markets based on how they act at certain levels. In order to understand these things more, there's two things you can derive from the chat as well as the morning call leading into the chat. One, if you did nothing, and we don't advise that you do this, if you did nothing but just do trades that are there, you'd probably mirror what our team is doing. We don't advise that. We advise you to learn from that and apply it in your own way. For example, we trade the broader equity markets. If you're looking at individual equities, throw it up there, because if we're trading the broader markets and stocks, right, and you have interest in, Tesla or one of the FANGs, well, that's got a high correlation to the S&P. If Larry is bearish on the S&P, and there's a good chance that the broader FANG stocks are going to trail with it if the S&P goes down. So you should look at it as educational as well as actionable information. Moving to the drivers last night. Yes, the Turkish lira is lower, meaning it's a little bit stronger against the dollar, trading 651 now in spot. That seems to be alleviating the risk-off trade. I wouldn't necessarily say call it risk on, but yeah, okay, call it risk on, I guess is what one of the other news services would do. When you look at the divergence in equities in Asia, the Japanese yen is a safe haven, and people that are it is becoming a safe haven again. People are putting their money into the yen, and it's actually benefiting their stock market as well. And that ties to metals. We'll come back to that. Europe has its own problems. In addition to Turkey, they have the Italian bond issue, so they have a tug of war that holds them back. The U.S., I'm going to leave the U.S. stock market to Larry. Oil has been a tremendous intraday day trading product. All markets offer opportunities for trading. Some respect and turn around your money quicker. So, for example, if you were to compare something like gold to oil and gold are both efficient markets. What oil figures out in a day, gold takes a month sometimes. And that's why you want to be in markets that tell you you're right or wrong quickly so you can move on. It's not a business when you're trading. You're not married to your positions. You have to recognize when you're wrong and you have to get out. Specifically on the trade side, I'll let Larry go into the details there. But what we're looking at today is, on the metal side, very briefly, gold is not a safe haven. Well, yes, it is. But the reason gold is down is because there are bigger issues. There are people who need dollars that are selling pianos so they can buy food. If your gold is in a secular bear market move, that people need to pay their debts in dollars. So countries like Venezuela sell their gold. Countries like Turkey, whether they say it or not, are going to sell their gold. Companies that haven't hedged their gold are going to sell it. So basically, the market is going to sell off when it should be rallying, but you can just easily tie it to the dollar. After the move lower yesterday, right? This is what I'm looking today. Myself and the Echo Bay people. We're looking to buy basis December gold. We're looking to buy strength above 1210, take some profits at 1215, maybe trail some stops. We want 1219 as a target if we get above 1210. If the market doesn't linger above 1210 for any period of time, we're going to get out and look to reverse for a sell-off down to, say, 1196 and cover there. Below 1193, we've got some serious trouble. We could go down to the 1170s. Below 1193, you could play short with 1196 stop. We would look to do that. Between 1171 and 1177, if we get that kind of move, that's when the fundamental buying is going to come in again. We'll flatten up there. We suggested yesterday, if you were bearish, to buy puts or put spreads. That would have been nice had you done that on Friday. The information came out on Sunday. We had one trade yesterday. We bought a little bit of strength in gold on the silver move. Didn't like how it acted. This is the point of real-time trading. Didn't like how it acted. Got out before our stop was triggered. What we should have done, and you can't live with these regrets, is we should have reversed, because right after that, the market dropped another percentage point. And, the psychology of regret is a big factor when you do trades. You have to be able to move on. You have another at-bat coming up next trade. That's it for metals and my comment on the markets in general. Larry, you want to go through oil and energy and S&Ps today?
Yeah.
Because,
first I want to discuss individual equities going across the board. I thought, obviously for us to make our trading decisions in S&Ps and the broad market, we use a number of different things. We look at option pricing, first and foremost, volume, charts as far as where the market's been and all of that. But what I also like to use is, individual sector equities. And, I thought yesterday was probably one of the most interesting days that I've seen in a while. You had, pretty much the FAANG very, very strong, but some of the FAANG members like Netflix and Google were down, whereas Apple was up really, really strong, and Facebook was up a little bit, but Amazon has gone crazy. It was up like $30, $35, came into almost unchanged, ended up about 18, and I see this morning it's up through or at yesterday's highs. So
Larry, can I add something to that I think is the point that people had been asking? When you invest in stocks, you want a diversified portfolio. When you trade stocks, you don't want to be tied to one company that may have a COO quit. Netflix had an event yesterday. So we're diversified when we trade a broad index. We care about the market, not about a particular company. I'm not saying you can't trade individual stocks, but you are diversified and you're looking at market risk when you trade the whole market. And that's why we tend to focus on broader indices.
Yeah, I always felt that way when I started. Interestingly enough, I started in Chicago and I was trading equities, and I was stuck in stocks that pretty much don't even really exist anymore. A company called Litton Industries, which did a lot of industrial production.
The microwaves, I
and,
think, right?
and then Bristol Myers, just a number of different companies. And my biggest problem that I had was I would be long a stock, okay, and the stock was a market stock. It moved with the market. And then all of a sudden the market was up 100 points, or back then it was like 30 points because that was a couple of percent move at the time. And my stock was down. And that's what brought me to the broad indexes was, in the broad index, you're going to be right if you're long and the market's up, and you're going to be wrong if the market's down if you're long. And it was very, very much easier to live with the fact that I put my work in and put a position on, and the market would move that way. So I do trade individual equities. I do trade market moving equities, but I really don't feel as comfortable as I do in the broad indexes. And it's funny, a lot of people that are day trading or swing trading the market on a day-to-day basis look, all they trade is Apple, Amazon. They trade the FANG because they're movers. But the real truth is, if you're looking to really look for the market to go up or down, the broad index, is a better play. I know people use relative strength and looking at different things, but to me, the broad index is a better player.
Especially if you're trading. Otherwise, if you have all your trading in one stock and there's no news, and the broader market is moving all over the place, you're really wasting your talents waiting for some specific item.
Yeah, but a lot of people in the equity markets are trading, volume and movement, and they're buying stocks that are up, selling stocks that are down. So I get it, but I felt it was a lot more difficult to do that. And really, the S&P market to me is the most pure thing to trade to decide whether the market's going up or down. You mentioned Netflix yesterday. They lost the key employee, but you never know. You never know what's going to happen. You could be long Apple, and they come out with negative news at a very strong market, and that market, won't go higher. So, for me, I watched those markets. Yesterday was a very interesting day. They were taking most of the FANG. They were crushing the financials. I see the financials are slightly higher this morning. There was a little bit of news in Twitter that was up. But overall, and the Tesla thing is an everyday thing. I don't think Tesla is a great trader right now, especially for people that are trading, the market, day over day and trading today, because it's very news related, and the relative strength, relative weakness trade is very, very difficult in a Tesla because, there's news and you don't know when Elon Musk is going to tweet some nonsense again. So.
Larry, you have time for a question?
Sure.
One of our subscribers, Steve, just asked about, and I know this is a question you can answer for an hour, but how do you feel currently right now? Do you have a bias towards selling the open or not? I think it was Steve. I say that
today
in the back of right now, gold is rallying close to numbers where I would want to get long. It might be a level to sell, but gold's moving, so the stock market is going to have some strength too, I think. So,
the market is up 7.25. I think we're in critical territory. Like I said, time clock is ticking. We're mid-month. Usually we make the highs near mid-month, so I don't know if we're going to take out the high at this point in time. It's something that obviously we got to keep an eye on. But today, I think you could probably sell rallies. I would like it to rally back to the highs here. That would be really good. But again, it's kind of, it's what I talked about yesterday. They throw bad news in, which isn't really that bad, and then they get people all crazy hedging, putting on new shorts, basis Turkey, which we discussed pre-going on the air, really doesn't even have a global economy per se. It's very, very small. Europe has risk there, not the U.S. So, I just think it adds fuel to the fire to go higher. That's what I've seen for the last 4 or 5 years. Some people that trade with me on an everyday basis, we talk and we're like, it's just amazing that the market, just shuns everything and goes higher. So, I would say today I'd like to fade it a little bit higher. There'll probably be two-way trade today. The options are pretty high. Obviously, today is not an expiration. The straddle around 35 is pricing in about a 15 to 17 handle move, which isn't even a percent for 2 days. So I think it's probably a bit low, but until they prove they can get out of this area, you know, it's basically range bound. So to answer the question, I would probably look to sell strength, but I will update in the chat what I'm doing and what I'm seeing. And the key to what we do here at the Opportunistic Trader is to be flexible to what comes up in the market. And we're very news related. We have Greg parsing out really, really good news to our subscriber base, especially in the FX area. So I rely a little bit on news as well as looking at other markets. So to answer your question, I would probably sell some strength. I don't see a move around like yesterday, but to be honest, when the market went positive yesterday, I was surprised that it came back down and took the lows out, shook some people up. So that's the roundabout answer.
Right. So strategically bearish, but tactically you have to be flexible once you're actually in the market. Nice call yesterday, wanting to be long oil in the close. That's something I guess that hurts, but you have to.
Yeah, I mean,
but you're right. But you were right. So
yeah,
the next trade's coming.
Yeah, I saw the move yesterday. At the end of the day, the only thing is for me.
But $1, that had to be more than you thought would happen.
Yeah, you know what? I had it up to $69.70 range. The only reason why I say that is the market was completely oversold. It sold out on volume yesterday, and then we bounced. And if you look at a chart from yesterday, it's pretty amazing. I think we traded down to 65.70, which is multiple dollars, $2.5+ from the highs here, which is obviously an amazing move, but the move down was about $2. So, the market sits up about 50-60 cents on the week. It'll be the first up week in 8. If we, obviously it's only Tuesday, but I'm assuming, that this market will trade fairly strong. We have the number tonight at 4:30, unless it's a big surprise with much stronger inventories. I expect to trade higher. I would not be a buyer in this area right now. It's up a lot, especially from the low, but if it comes in, I would buy some weakness and look for a bit of an up trade here. So
we have more questions coming in on the chat, but I think you're better off answering those on the chat for subscribers. As you get into the flow of things. Someone's asking about oil as well, but it's risk on today until it's not risk on. So there's probably going to be good day trading in the S&P, good day trading in oil, and maybe an opportunity to trade metals. But certainly the FX market, if you're not trading it, you should be paying attention to it as a driver of the markets that we do focus on.
Yeah, I think that, obviously, you got to get enabled for the Turkish lira and watch that a bit. I guess people are queuing off that. We have the pastor is, not being released. If he gets released, then, the market will probably have a knee-jerk reaction to that. I think it's a fade. I think the problems are a lot bigger than that, but people are looking at that. So, we're going to keep our eye on the markets. Right now, market's up $7.50 on the S&P, NASDAQ up about 26. If I were to play it, I would probably want to be a better seller of NASDAQ in here and a buyer of S&P potentially.
Which gets to the whole point of sector trading, and that's arbitrage, and we do that. That's not something we want to start out, helping people understand. Within the sectors, maybe the FANGs are a buy and the retail's a sell. Retail's had a nice run. But, then you get into sectors and individual stocks, and, we want to make sure people are on board with, plugging into a trader's mind, so to speak, with the simple, plain vanilla things that we are doing. There are far more complex trades that you and I know I have done in an arbitrage way. Like you're saying right now, I would be a buyer of this sector and a seller of the broader market, or vice versa. Like that's something that can generate 50 questions right there. And I think people need to understand that how your mind and how the other team's mind, traders' minds operate before we delve into individual stocks.
Yeah, that's fair. But overall, there's not really much movement in general. We'll see how the market opens here. Right now, we are positioned in nothing. We're flat to market, which is always a good place to be, so you can assess properly without being jaded. Again, I'd like to buy some weakness in crude if it comes in. I don't expect it to come in all that much, but you never know after yesterday's trade, and we'll be back at you before the opening to talk about any changes in trades that we've put on pre-opening and trades we're going to put on coming into the day.
Yeah. Greg did start the day out. He may have taken it home from last night. He's long the euro versus the Swiss franc, and that's like a risk-on type of trade. He's got an Aussie dollar trade on as well. So, that's an indicator that he's looking risk on, and stock markets and other markets, if he's right, will follow suit. So we're flat, and that's a good way to start the day.
All right. Good luck, and we'll be back to everybody pre-open. Thank you.